Good morning, good evening, good afternoon, wherever you are in the world. Welcome along to Beyond Bitcoin. My name is Derek Graham. I'm the CEO of Portal Asset Management. And as usual, I'm here with my friend and colleague, Nitin Gower. Hi, Nitin.
Hey, Derek. Glad to be here again for another exciting week. My name is Nitin. I serve as Director of Financial Sciences and Digital Assets. I also serve as CTO and Head of Research at Portal Asset Management. Looking forward to a fairly shiny conversation, if I may use the term, Derek.
Perfect term. So like normal, of course, we're not providing financial advice. We're two gents chatting away about a space that we're passionate about and interested in, and also more often than not philosophizing about how the impact of the traditional industries and economies impact this new metaverse world that we're in. And I thought a great topic of that was to talk about something that formed a long, long time ago. In fact, it formed at about the beginning of time, and it formed inside some of the biggest stars in the world, in the universe. And that, of course, is gold. It's an extraordinary thing, an amazing history. It's something that nations have fought over, people have died to huge deaths to get, and many people have died to be able to get this precious gold. It's been around for nearly, well, way beyond 12,000 years, but it's certainly over that 12,000 years has been considered of value to a greater or lesser extent, either as jewellery or as a payment method. We know it today more as a stabilising store of wealth. And as different societies go through different periods of time and different characteristics form around what we think gold is, because of course one has to remember it's just a belief system. There's nothing real about it, short of it being shiny, gold and heavy. Its value is a belief system. And so most values are belief systems, and same with the value of the world of digital assets and digital currencies. Now, we of course call ourselves Beyond Bitcoin, but today we're going to talk about Bitcoin, and we're going to talk about Bitcoin in its relation to gold. So like normal, if we can do a bit of a helicopter view here and set some context. And I'm sorry, everyone, but I'm going to give you a whole lot of statistics so that we can then decide the relevance of gold and the relevance of Bitcoin going forward. So we're kind of starting this by the concept of a flippening. When might gold flip the value? When might Bitcoin rather flip the value of gold? And that relates to the total capitalization of it. And a number of commentators in the industry have been talking about it, that occurring within the next 5 years. And what does that mean? So let's have a look. The total gold in the world is currently valued at about $11.7 trillion. The total value of Bitcoin is $1.13 trillion. And that represents, by the way, about 43% of the crypto market, which is today capitalized at $2.6 trillion. For those that have not been under a stone, the market dropped about 10%. In the last 48 hours. So the globe mines, or will mine in 2022, projected at about $189 billion worth of gold. 36.8% of this is used in jewellery. And as Nitin and I have laughed, a major percentage of that probably goes to India, where they consider both jewellery beautiful and a store of wealth. So gold, like many heavy metals, has been forged out of stars and in the universe and is now peppered all the way through the planet Earth. And if you look at how to get to gold, it takes a great deal more effort now than it did, say, when the Incas would wander down to a stream and pick it out of between the rocks. And what we're seeing is that people have often turned around and compared the amount of energy it takes to mine Bitcoin per annum. And by the way, the amount of energy it takes to use Google search engines on an annual basis. What's interesting is the amount of energy it takes to mine gold. And so the estimated amount of energy are 22 terawatt hours per annum to mine Bitcoin. That is the equivalent of about 1% of the global energy consumption. So a lot of people will throw their arms up in the air about that and ask, whether that's reasonable or fair. I assure you that people that own Bitcoin think it is reasonable and fair because they need that to be able to get their Bitcoin and transact them. Meanwhile, the gold mining operations are consuming 132 terawatt hours per annum. So massively more amounts of energy than it takes to mine and transact Bitcoin. And that's energy before we talk about landscape destruction, acid mine drainage, mercury production, destruction of the Amazon, the cost of translating the gold. Now look, as a small aside, I live in Perth, Western Australia, one of the biggest gold mining towns in the world. And so I'm thinking this is going to take me off a lot of dinner party lists. But nonetheless, these are facts. And so when we look at that, we turn around and say, so there is a real cost of delivering gold to this industry, an awful lot more power, and of course, a great deal more environmental destruction. So gold sure has to be precious for that to occur. The cost of mining gold is interesting too. It's about $1,048 an ounce. Now, this is relevant because if gold price drops down to $1,000 an ounce, then you get into a point where a lot of the mines will no longer be viable. We'll get back to that a little later. The grades have declined 4% over the last 12 months to an average of 1.39 grams per tonne of ore that they have to dig out and process to get it. So there's less of this more affordable gold available. It employs in Australia alone about 240,000 people directly and indirectly. The estimate worldwide was hard to find, but worldwide, if you look at gold and precious stones, nearly all of which, by the way, can be manufactured synthetically to the same standards now that are mined, but nonetheless, that employs about 40 million people worldwide. And so gold is solidly physical, and solidly physical things have an impact on the environment when you need to mine them, especially when they're 1.39 grams per tonne. Whereas what we're generating in this particular industry of Bitcoins, they're not shiny, it's not physical, but it has another interesting thing attached to it. And that is that Bitcoin has about 109 million owners. So in other words, Bitcoin has 109 million investors in it. And I would argue that unless you're talking about jewellery, gold doesn't have 109 million investors in that. So Bitcoin is going to have an impact, its price is going to have an impact by virtue of Metcalfe's law. And I'm going to let Nitin talk about Metcalfe's law and also talk about the parallels we're seeing between gold and Bitcoin and why the correlations exist. The bigger questions to ask following that is, does gold have a finite future to it? And is it going to change the relevance of it being a store of wealth? But that's just the basis of the industry. Let's just start the discussion with that. Over to you, mate.
No, absolutely, Derek. I think there's a great narrative. And I would say that gold has history and symbolism. Throughout the history, as you mentioned, from Incas to Egyptians to eventually Indians, looked into this as a coveted element. And even today, gold remains an ultimate prize. You have gold medals. We talk about having a heart of gold. We talk about owning a gold credit card. So gold has certain level of symbolism around it. But traditionally, the context of this conversation is, why are we comparing Bitcoin to gold? And historically, gold, the gold standard, as we call it, was tied to using as money. And eventually, it became a gold standard where we begin to measure the economic terms of a countries as to how much gold they owned, until Nixon sort of nixed, not to have play on words, the entire element of tying your currencies to gold. That the whole element of gold has to, being traditionally used as money, is a supply isn't manipulated by, is not manipulated by central banks. And many believe that gold is actually the best way to properly measure Bitcoin's value, since the value of fiat money is always changing. And I think the testament of that has been the recent stimulus, where the 40% of overall supply of US dollar was just printed in the last, I would say, year or so. And so I think that is something which the industry is woken up to both the crypto industry, the finance industry, and begin to compare the relevance of gold in this context, not just as an avenue or a competitive element to Bitcoin, but also in context of the existing monetary systems in terms of money supply. And dollar has constantly been printed and will likely never stop, because there's always a avenue and always a quick fix that many of the central bankers around the world would like to view it as an avenue. So some context around gold as store of value. Gold has started a standard of value throughout the history, remains highly desired asset today, even today, I think. As a commodity, the value of gold changes with supply and demand. I think as few numbers that you talked about is how much more of gold is left, and there's some estimate that 80% of gold, which is like 190 tons or something, 20% is left to be mined by BBC Research, as I looked into it. And so what we begin to question, which is the thesis of our discussion here, is one, what happens when Bitcoin valuation exceeds, and that's the asymmetric bet that we're talking about, exceeds the overall valuation of gold, to the investment landscape, to our perceptions and what we view. And I think we have been talking in blockchain context as changes in perceptions and changes in attitudes, change in the demographic who is viewing this with a completely different lens than the previous generations have. So that's a shift in the cultural value of how we view things. Second thing I think I would argue in favor of gold in some of the cases is it's a metal. It's used in electronics, it's used in medicine, dentistry, space exploration. And that actually has certain innate characteristics of a metal that makes it useful. Whereas Bitcoin, as purely a store of value, I think is easily transferable. Like you can, for me to move $1 million worth of gold will take a lot of effort in putting gold in a suitcase, and somebody has to verify and validate that it's a real gold and it has the right level of purity and everything else. Whereas in case of Bitcoin, the entire ecosystem understands the ability for me to transfer those Bitcoins. So there's some element of that to say, besides the element of store of value and transfer of value as a medium of exchange, as we typically define, gold sort of falls short to some of those characteristics, but gold as a metal has many other valuation mechanisms. So I would sort of weigh it out to say it's not just about, in purely financial terms, you're absolutely right, that at some point gold will not have the same market depth as the demand for Bitcoin goes up. And I think we believe that if Bitcoin has to go a little above $300,000 to be able to equate to the gold's market cap that you have listed, which is about $11 trillion around the world, I think that changes the equation a little bit. How that shift happens, I'd love to get your perspective as well, Derek, on that.
Well, it's going to be interesting to see whether this is a zero-sum game, as we've often said. So just because Bitcoin gets to $11.7 trillion, does that mean gold will become the same value? Less, more, less relevant? These are the questions around that. Is the flippening of capitalization of the assets the sign of gold being reconsidered as a store of value? Because as you state there, gold is this beautiful inert metal that people find desirable. However, that's only 36% of its use. 66% of its use is this kind of insane outcome, digging it out of the ground, causing a huge amount of energy use and destruction, to put it back in the ground in the form of a vault, and it to be kept. It's kind of really environmentally nuts to do that. In fact, in early 2017, I sat down with some gold people and I said, why are you digging it out of the ground? If you have a full production analysis of what you've got in the ground, what would be called bankable gold, so you can go to the bank and borrow money to mine it, then why not actually tokenize what's in the ground in your lease and say that gold's there, and at some time in the future, if we want, we can dig it up. That wasn't looked upon as a viable proposition for the gold industry, needless to say, but it's true. I mean, it's in the ground. There's the value of the gold. What's the difference between that and a vault? Well, to be able to see it and touch it, maybe. But the point is that it takes a huge amount of effort to generate something that's a store of wealth. And if then gold, the real flipping occurs, and that's moving from the store of gold's wealth to the store of Bitcoin wealth, then the price of gold should drop. And if the price of gold drops, then mines that are mining gold at less than $1,000 and odd an ounce aren't going to be viable. and then the market sort of rebalances. And that's a future generational thing. And I don't think it's going to be 25 years away. I think it's going to be a lot sooner than that. But the thing is that at the end of the day, it's just a belief system. Both are. So will our belief system change, man? What do you think?
Yeah. So two things. Right? Let's draw similarities, because there's a lot of, and the term mining, and I don't know if this is intentional, Derek. Some of the characteristics are the same. The economic systems, right? For example, if gold value drops, and we've seen that with oil and other commodities, then the production has an impact because there's not enough incentive for people to go and start digging up these earth, and the companies who are involved in production of these things suddenly stop because it doesn't make sense, or they'll hedge, or they'll sort of hold on to these the mined gold and refined gold till the market value comes up before it hits the market. And we see the similar economics in the Bitcoin, except that the Bitcoin has a self-correction mechanism. So, you must have heard of difficulty adjustments. For example,
Yes.
if suddenly when China dropped and they had the ban on mining, we had seen pretty much 50% drop in hash rate, which implies the fact that, and the protocol itself detected that whole element and be able to reduce the difficulty rate, which means the mining was a lot easier, promoting people to start mining again. So there's this control mechanism, which I thought was super interesting, which is not the case with the traditional mining elements, because there are places where you can find gold, there are places, but in case of mining of Bitcoin. So the term mining to me, as we were researching for this particular podcast, was super interesting. I don't know if it is intentional to bring the same characteristics of limited supply and being it rare and not toxic, so to speak, and also not, cannot be hyperinflated. You cannot just make gold. I think there's a certain finite supply of gold, and it has certain characteristics which makes it desirable. Like Bitcoin, it has limited value, and it basically goes around the fact that Bitcoin has 21 million. Gold's new yearly supply is 2,500, so to speak. And both of them, like, for example, Bitcoin has 10% left, even though Bitcoin is 13 years old and gold has been being mined for 4,000 plus years. So there's a few similarities that I find, but I also in this process of drawing similarities between mining, I also look at velocity, which is a testament of our society's growth in terms of technical innovation, that while it took us 4,000 years to get to the existing supply of gold, and there's 20% more left, and the economics of using existing technology to mine gold is becoming less and less desirable, we begin to find that the mining of Bitcoin is accelerating at an exponential pace, even after China pulled out. And to me, that's a testament in its own right, is the pace and rate at which the innovation grows, the rate at which our ability to be able to dedicate resources for things that we care about, the things that we want to mine about. And I believe that if we all could go and start digging up, finding gold in a truly decentralized manner, we would do it. Of course, that's not an option available to us. And so I draw that analogy both in terms of the fact that there's a lot of similarities, both from the genesis of how these things of value are created, that includes gold and Bitcoin, how people are expending their time and resources, both in terms of mining and investment of capital, whether it's getting heavy earth movers and massive machineries for mining equipment, or getting ASIC chips and getting these massive equipment. I think there's a lot of similarities in that whole respect, including the demand and supply ratios. And I believe that BTC is expected to reach, I think there's some numbers that we have seen from Morgan Creek Capital last week, is expected to reach 1 million in 2028. Some of them are talking about 2035. And I think in some cases, the Bitcoin may reach that valuation mechanism. At that point, as you rightly mentioned, it's a belief system, which means that how do we value Bitcoin? And does that value then equate to gold? And I would argue that my grandparents and my parents in India and the past generation will always value gold, because it has ornamental value. It's an heirloom. They will want to preserve and relay the wealth from one generation to another generation, which I cannot really show off Bitcoin because it's virtual currency of sorts. And so I think there's a few of those differences that will always remain. I think from a financial perspective, and what we do, Derek, is me and you, as we look into this space from investment perspective and try to make sense of it, is that now I have another asset class that may have the same market depth that gold has today, which means that we can attract institutional investors. You begin to see a lot of institutional investment coming into the space, which to me has a general effect of elevating the entire space. which is very attractive, just like what gold has done with other metals like silver and palladium and platinum and so on and so forth. I'll pause there, Derek, and love to get your thoughts.
Look, I think human beings tend to extrapolate out the current status of things around them and project out the future. And it's a little bit like the artificial intelligence becoming quite useless in anything that's relatively linear. So I recall when in the 90s saying, my gosh, soon on one of these amazing USB plugs, you'll be able to have the entire libraries of the music world and listen to them anytime you want. Now, look, I might be right soon, but the point was I was extrapolating out a technology that's become irrelevant. Why do you need that when you've got a streaming service that can send you anything you want? And so I think the same occurs with gold. My sense is that we're seeing generation X, Y, and Z, which are the digital natives, play a major role in what we're doing here. These guys call this gold shiny boomer rocks. In other words, they don't relate to it. They're going, why do you need this stuff? And in a metaverse, why do you need this stuff? If you're existing in a metaverse, gold is of absolutely no use whatsoever. Bitcoin, however, is an absolute use because you can always buy stuff in a metaverse and convert it out of Bitcoin or into some other currency. So it becomes very, very powerful. We talked about a distributed ledger technology platform called Luxo, you might remember.
That's right, I do.
And Luxo is a blockchain platform for designer labels and styles to be able to provide digital assets in this virtual space. So you can go and buy a Dolce & Gabbana suit for your avatar, or you could buy handbags, or you could buy jewelry and dress inside, or you can buy a house and you can, et cetera, as you build into these, as you exist in this metaverse or the multiple metaverses that will occur out there. Where does gold sit in that? It kind of doesn't. Yeah,
unless you tokenize gold.
Unless you tokenize it, but then exactly. And there's some great tokenized golds. I mean, Oris is a project I was involved with early in its inception. And Oris has tokenized gold that sit in vaults throughout Europe. And they're doing an exceptionally good job of it. And they're tokenized gold, silver, and platinum. But I still ask the same question. Generationally, what are the generation Zs thinking of gold in this metaverse? And if they think that it's actually not relevant and their return of wealth generation out of Bitcoin is so profoundly stronger than that of gold, making the assumption that is the case, then gold may well start becoming only a sort of a global view of where it might sit in a traditional industry. Well, the more finance moves across to digital assets, the less relevant that could be also.
Yeah.
And if you do think that 36% of the production of gold is used for industry and jewelry, then if it starts becoming less relevant and there are thousands of tons of it sitting in vaults, then you can start using those vault gold as jewelry rather than as stores of wealth. And you get to see a kind of inversion of what gold's value might be. Now, I seem to have chosen the soothsayer of doom for gold today. I didn't mean to choose that, but it's just interesting if you actually see a change of belief systems, what that would do to the value of gold and how useful is the value of gold in the future. Yeah, that's what I put out there. What do you think? Metaverse world, how big is that going to be in the future?
Yeah, no, I think that's a great question. I think, there have been at least a dozen projects that I know of who have attempted to tokenize gold, and only because people have this innate need, especially to address and again, when we spoke to Mauricio from Brazil and Akshay from India, they talked about demographic, and both of them talked about the fact that the viewed world, the 18 to 34-year-olds who are dominant in this space, view the world differently, and they don't view the world as their parents in the past generation did, which I think is a generational shift, change in our thinking and mentality and cultures and so on and so forth. So you're absolutely right. I think in many cases, the dozen or so projects that I know of who are looking into tokenized gold and using them as either payment instruments or transfer of value, which is nothing but a shift from digitization to tokenization of commercial paper, which is used for trading gold, right?
Yeah.
I think the reason that they have done that is because they would like to appeal to this 18-34-year demographic that's heavily vested into the space. And to me, I think in the metaverse, as you rightly pointed out, I think the truly crypto liquid assets, these are the layer one protocols, as we have discussed in the layer one session, Ethereum and Bitcoin become more valuable because, one, they provide enormous amount of fungibility. They provide a massive exchange mechanism that no matter where you are in the world, the ability for me to be able to transfer value becomes a lot more simpler and easier. That I don't have to find a gold broker and be able to figure out the valuation of the gold and then exchange that for cash and move that money around using a money broker license. All that just goes away. And I have an ability to exchange one token for the other. And that's exactly what tokenized gold does as well. So I think your thesis on the fact that if we're getting on this truly digital medium of exchange, whether it's exchange of belief systems, exchange of a meme, exchange of a new storytelling that actually happening on an hourly basis, as we have seen, I think gold has less role to play at that point, and then it becomes simply a connection to the real world, which is translating its value measurement systems, both in terms of fiat and other things of value that includes gold and diamonds. And I think if you recall, diamonds were very popular once upon a time because they were something that could provide an ability for you to move value in a much smaller scale than gold would do. You need much more bigger bricks of gold than a few pieces of diamond and then diamonds became the preferred mechanism. But it had its own set of challenges in terms of purity, in terms of valuation, and the markets didn't take it. So I think, but there are a few comparisons I'd like to make, Derek. One is between gold and cryptocurrencies, right? One, on the basis of legality, transparency, and safety, gold ranks definitely today above cryptocurrencies. And that's the regulatory battle that the industry is going through at the moment, and that's the constant element. But let's leave it at that for now, in the sense that gold is accepted as one. In terms of rarity, I think both are rare. They have, as we discussed in terms of numbers, they are at par, in my opinion, in terms of how rare they are, in terms of mining, in terms of availability of token and gold. As far as liquidity is concerned, both are great. I mean, gold is as liquid as Bitcoin. I would argue Bitcoin is more liquid. I can exchange Bitcoin in a minute, and that's what tokenized gold is trying to do, is bring the same level of speed and liquidity. And talking about volatility, which becomes a little bit more interesting context, I think, is that Bitcoin is much more volatile as compared with gold. And the shiny yellow metal has a long history of being less volatile than crypto. But that's, I would say, of 4,000 years of evolution of trading gold, which has given it some sense of stability, right? And again, gold has an unmatched accessibility to people of all economic standing and technical knowledge. My grandmother doesn't have to know anything about cryptography. She can still own a piece of gold and enjoy its luster. And most importantly, I think for the existing traditional finance, the central bank apparatus, gold is still the ultimate currency of central banks as a high quality liquid assets. So that aside, if you're completely talking about metaverse and they're envisioning the world 10 years from now as the Bitcoin increases the value, not only gold will be left behind as I see it, at least in the digital realm, but I think it will also create additional demand for Bitcoin, because Bitcoin becomes the most, Bitcoin, Ethereum, and many of the other sort of layer one tokens becomes the most liquid asset class in that ecosystem. I'll pause at that, Derek, to see if that even makes sense.
Well, I love the way you described something there, and that is the story relating to gold, the story relating to Bitcoin, because that's what it is. There's stories relating to these things. And one has to realize that in this world, this metaverse that's becoming more and more used as a term for it, there's virtually unrestricted opportunity. So in other words, it's in a space of great abundance and of relatively small impact within the space. However, the space will impact the rest of the world. And so if, by example, we do see Bitcoin become the preferred store of value for governments, central banks, and large corporations around the world, you'll see the value of gold probably drop. I mean, I'm sorry, I'm just quoting demand and supply. And so if that's the case, then there'll be less gold mined, there'll be less people employed with it, there'll be less damage to the environment. As a lot of Eastern religions say, this is cause and reaction. There's no divine intervention with that. It's just cause and reaction. And I think you'll see this existence in the metaverse now being seen as a space of huge abundance and unlimited potential, as technology takes over and human beings start enjoying their forays into the metaverse. And that will have impact into the real world as we see it and the economies as we see it. And that I find particularly fascinating. And I do wonder where gold will be in 2050. Will it be something of just jewellery, or will it still be part of the discussion of central bankers? What do you think?
No, absolutely. Actually, I'm waiting, now that you inspired me in the thinking there, Derek, I'm waiting for the Bitcoin to get to some, again, asymmetric bet. When Bitcoin was 20,000, its collective value was more than JP Morgan, which is a 130 plus year old bank. When Bitcoin reaches 50,000, which is now, its value is larger than Google. And when it reaches 100,000, it'll be larger than Apple's market cap, which I think, so that's an asymmetric bet, right? Which the value changes in terms of what you compare it against. To reach to gold level, I think the number is about 300K or a little higher than 300K as of today's valuation. And I think I'm waiting for that day, because I think we should revisit this to see what are the sentiments, what are the market reaction to some of these areas. But that's one reason why I think in some of the research that I've done is that you find many of the asset management firms and many of the pension funds have not jumped yet into Bitcoin because of the market depth. It's still 1 trillion, which is way, way smaller than other asset classes that are in the system. But I think once you reach the same level of gold, I think, and this is my prediction, that the demand will further push the value up, because now you have the market depth, which attracts attention, which attracts the ability for them to go after this asset class as per se, which I think will further leave gold behind, at least in a valuation mechanism. And so I think that's yet to be determined to reach that level. And yes, it will have ups and downs. We'll see where this goes. But I would love to actually, as a social experiment, go back and evaluate this to say, okay, fine, Bitcoin actually has now 1.3 trillion, as you mentioned, it'll hit the gold's valuation mechanism. What's next, right? And at that point, I'm also curious to see if by the time, and I think 2140 is far away, but as you know, the Bitcoin halving, which increases the value of Bitcoin every 4 years or so, there'll be just a few halving events left. But until that time, I think much of Bitcoin would have been mined, and it'll be interesting to see the sentiments and reactions from the industry itself of use of Bitcoin, because right now it's only used as a store of value, not even a medium of exchange or unit of account, because it's just too expensive to use Bitcoin as a payment instrument, so to speak.
That's right, exactly. Well, I guess to wind it up, I think it's fair to say that you and I, and probably most of the listening audience, see this world of metaverse in its most embryonic stage, its earlier stage. We know Apple's coming. We know Facebook is coming. We know Google is coming to create their metaverses that future generations and existing generations will enjoy and be in. And that being the case, we don't have any doubt about it. There's no doubt that the metaverse is coming. There's no doubt that it can have exponential growth. And there's no doubt that it's a world of plenty, because its cost base is minimal. And so with all those signs in place, my view is that gold will become far less relevant in the future to future generations. And that will impact price, and gold will start getting used more for jewelry and industrial use than it will as a store of wealth for economies. My view. Don't go out and buy gold or sell gold accordingly. Just my view. But
you have forgotten one thing. You have forgotten one thing, Derek. We have forgotten the Elon Musk factor.
Yes.
And I'm not talking about his tweets at the moment. I'm talking about the space exploration. So let's say that suddenly now they've decided to go to Mars and they need a lot more gold, because gold is used in space exploration. What happens then? Because now you'll start finding, just like what we have seen with DeFi space, where lack of liquidity requires them to collateralize your existing tokens, and that has increased the value of your collateral and yield that we have seen. Is it conceivable that the Indian ecosystem will start collateralizing their jewelry because now Elon Musk needs all that gold, and Blue Origin needs all that gold?
And
That's something to think
you
about.
You can't put that many tons of gold in space. It takes too much to lift it. But you're absolutely right. There's a future industrial use for it the whole way. And it'll still stay shiny and beautiful, and it looks gorgeous on my fiance's ring. And so it definitely has a space. But look, thanks very much. Of course, it's always great to chat away with you and throw ideas around and philosophize and, as you say, storytelling, because this is where people get their thoughts on how they might, look and plan their ongoing future in the process of storytelling. And that's all we're doing today. Now, I think we might get back to what we've done in the last couple of weeks, and that is that we'll look for a great Bitcoin, more to the point, blockchain expert or specialist or member of the community in different countries for our next Beyond Bitcoin episode, to get back to that really interesting facet again about belief systems. How does each different country's belief system utilize digital ledger technology and what it can create from that? What do you think, Nitin?
Absolutely. I think we should try to this time target Southeast Asia. I think we went Brazil, South America, we did India. They should go for Southeast Asia because there's a massive ecosystem growing there, and it's going out of necessity, and innovation is driving. It's the necessity that's driving innovation. It's not a Silicon Valley that's driving innovation, which I think is certainly a very interesting aspect of this. So let's try to target Southeast Asia next week and bring one of the leaders in that space and get on the ground perspective. And looking forward to that conversation as well, Derek.
Terrific. All right. Thanks everybody for listening to us along the way. Of course, always subscribe and share it with other friends if you think it's relevant. Have a great week, and we'll see you next week on Beyond Bitcoin. Bye for now.
Ciao, guys. Take care. Bye-bye.
See you.